S&P 500 technical analysis for May 15th, 2026. The Beachbody Company Q1 2026 earnings call summary. While individual fitness companies have limited direct impact on the S&P 500, consumer discretionary earnings patterns signal broader economic health. Weak performance in subscription-based fitness models could indicate tightening household budgets, potentially pressuring the consumer discretionary sector, which represents 10% of S&P 50 weighting, and influencing overall market sentiment. SunPower Q1 2026 earnings call summary. Solar sector performance directly impacts clean energy ETF flows and the broader technology sector within the S&P 500. Disappointing renewable energy earnings typically trigger risk-off sentiment in growth stocks, while strong results can boost institutional allocation to ESG-focused funds, creating upward pressure on tech and utility sectors that comprise nearly 40% of S&P 500 market capitalization. Australian court finds grocery chain Coles misled shoppers in discount lawsuit. International retail litigation creates regulatory risk contagion fears across global consumer staples. This ruling could pressure multinational retailers in the S&P 500 consumer staples sector, triggering defensive positioning as investors anticipate similar regulatory scrutiny in other markets, potentially impacting companies like Walmart, Costco, and Procter & Gamble. Weekly moving averages, SPX at 7501 sits well above all key levels. The 589-point gap above the 20-week SMA at 6912 shows exceptional bullish momentum. This wide separation typically precedes either continued acceleration or sharp mean reversion. The 1,000-point cushion above the 200-week SMA at 5,303 confirms the long-term uptrend remains intact despite stretched conditions. Weekly Bollinger Bands at 7501, SPX has broken above the upper band at 7459. Signaling extreme momentum. This breakout above resistance suggests powerful buying pressure, but historically leads to volatility expansion. The 1,036-point range between bands indicates high volatility. Watch for either continued breakout momentum or rejection back toward the 20-week SMA at 6912. Weekly RSI at 71.35, momentum is in clear overbought territory, but hasn't reached extreme levels yet. This reading suggests the rally still has room to run, before hitting typical reversal zones around 80. However, weekly RSI above 70 historically precedes increased volatility and potential distribution phases. Bulls remain in control, but should watch for divergent signals. Weekly MACD at 166.38 versus signal line at 101.5. The 65-point spread shows robust bullish momentum. This wide divergence indicates strong underlying buying pressure with no signs of momentum decay. The continued expansion above the signal line suggests institutional accumulation remains active. This setup typically supports further upside until the lines begin converging. Daily moving averages. SPX at 7501 trades 255 points above the 20-day SMA at 7246, showing strong short-term momentum. The tight clustering of the 20-day at 7246, 50-day at 69,010, and 200-day at 67,050 creates multiple support layers. This stacked bullish alignment suggests any pullback should find buyers at these key levels, particularly the 50-day SMA. Daily Bollinger Bands at 7501, SPX sits just 5 points below the upper band at 7506, indicating extreme short-term momentum. This proximity to resistance suggests either an imminent breakout or reversal. The 520-point bandwidth shows elevated volatility. A break above 7506 targets further expansion, while rejection could trigger mean reversion toward the 20-day SMA at 7246. Daily RSI at 77.71, momentum has reached severely overbought levels approaching the critical 80 threshold. This extreme reading suggests the rally is becoming unsustainable in the near term. Daily RSI above 75 historically leads to profit-taking and short-term corrections. Traders should watch for bearish divergence or a break below 70 to signal momentum exhaustion. Daily MACD at 153.79 versus signal at 141.17. The 12-point spread shows continued bullish momentum, but narrowing divergence. While still positive, the gap is compressing compared to recent readings, suggesting momentum may be peaking. Watch for a bearish crossover below the signal line as an early warning of trend change and potential distribution phase. Begin hourly moving averages. SPX at 7502 holds 63 points above the 20-hour SMA at 7439, showing persistent intraday strength. The clean upward slope across all timeframes supports continued near-term bullish bias. The 381-point gap above the 200-hour SMA at 7121 provides substantial support cushion. Any hourly pullback towards 7439 should attract buyers in this momentum environment. Hourly Bollinger Bands at 7502. SPX trades mid-band between the upper at 7545 and 20-hour SMA at 7439. This positioning suggests consolidation after recent momentum, with 43 points of upside to resistance. The 213-point bandwidth indicates moderate volatility. A break above 7545 signals renewed buying interest, while failure at current levels targets the lower band at 7332. Hourly RSI at 71.01. Short-term momentum remains in overbought territory but has pulled back from extreme levels. This cooling from peak readings suggests healthy consolidation within the broader uptrend. The RSI holding above 70 indicates bulls retain control, but watch for a break below 65 to signal more meaningful momentum shift towards sellers. Hourly MACD at 33.97 versus signal at 30.02. The 4-point spread maintains bullish momentum but shows signs of flattening. This narrow divergence suggests short-term momentum is stabilizing after recent acceleration. While still positive, the compressed spread indicates reduced buying urgency. Watch for crossover below 30 as signal for intraday profit-taking opportunity. Key levels: buy zone at 6910 near the 50-day SMA, which has provided dynamic support in previous pullbacks. Sell target at 7506 at the upper Bollinger Band with RSI at 78 approaching overbought extremes. Lean bearish recommendation, despite bullish MACD crossover, favoring short positions on rallies given stretched momentum conditions across multiple timeframes. Subscribe for daily technical analysis and market insights.